Hey, welcome back. It's Jason Walter here, and here's your latest housing market update. Hope you guys are having an awesome day, by the way. In today's housing market update, I'm going to be sharing the latest report from Redfin. This is because they just announced yesterday that housing supply is up for the first time in nearly 3 years. They're also reporting that home prices actually decreased last month as well. So with that said, let's go ahead and dive right in. I have a lot to share in today's video. This was published yesterday at the time of this video. Again, housing supply is up for the first time in nearly 3 years. And the number of houses for sale nationwide in June rose 2% from 1 year ago. And I know what you guys are thinking, 2% is a very small number, right? I get it, 2% is a very small number in one single year. But look at the trend here. So I always share this with you guys, but I also want to mention this again because it's worth noting here because we're seeing this big change in our housing market over the past couple of years, or the past couple of months, I should say. And largely this is due to rising mortgage rates, which have increased housing supply. So for the first 2 months of this year, housing supply has been down approximately 18% to 20% from 1 year ago. But ever since then, that has been going up greatly. So it's pretty remarkable that we were down approximately 18% back in February, and now we're up 2% in a very short period of time. One thing I want to mention regarding this number here is that I reported a few days ago that Realtor.com is reporting that housing supply, or active listings, which of course is housing inventory, is up actually 28% compared to 1 year ago. So the differences between Realtor.com and Redfin is that Realtor.com is looking at yearly changes by week. So for the most recent week, this is for the week ending July 9th, housing supply is up 28% for the same time period in 2021. And ever since basically mid-May, they have been reporting an increase of active listings or housing supply compared to 1 year ago. Again, ever since the middle of May, they've been reporting that the number of houses for sale has been positive compared to 1 year ago. So we have more houses listed for sale compared to 1 year ago ever since the middle of May. However, Redfin is looking at a June 2022 compared to June 2021. Also, of course, they're not looking at every single home sale across the United States. They have different sample sizes as well. So I imagine that's another factor that's causing this disparity or this difference in housing supply numbers compared to a year ago. In any case, there's no denying that housing supply is actually more right now compared to 1 year ago. And then we're seeing that from Realtor.com as well as Redfin. So Redfin is saying that this is the first annual increase since July 2019. And this is because we're not seeing a huge increase of new listings. We're seeing a huge pullback in home buying demand, and that's causing housing supply to increase. And more of that here in just a little bit. So housing supply has basically been built up or has been increasing due to the combination effect of 5.5 plus mortgage rates, high home prices, and a faltering economy, which is pushing home buyers to the sidelines, therefore creating a more balanced housing market. So in regards to mortgage rates, here's a latest update for you guys. As you guys all know, mortgage rates are tied pretty directly to the yield on the 10-year U.S. Treasury note. And as of today, which is the morning hours or midday of the 15th, the yield is down slightly compared to yesterday. And we're sitting at approximately a 2.9% yield right now. Again, when the yield on the Treasury increases, so can mortgage rates. And of course, when the yield decreases, mortgage rates can decrease as well. And according to the Mortgage News Daily, as of today, which again is the 15th, the average 30-year fix is at 5.72%. Of course, this is the average for people with exceptional credit. This is an increase of 2.68 percentage points from 1 year ago when rates averaged 3.04%. Absolutely insane. It's worth mentioning that mortgage rates have been declining over the past 30 days. So as of mid-June, the average was actually 6.28%. Now we're down to 5.72%. So in other words, mortgage rates have decreased approximately 50 basis points in the last 30 days. Also, according to Investopedia.com, as of today, the average 30-year fix is at 6.09%. Therefore, it's safe to say that mortgage rates are averaging about 5.7% to just over 6% right now. So going back to this report from Redfin here, they went on to say the following. Home sales fell nearly 16% from 1 year ago, the largest decline since May 2020. And what happened in May 2020? Of course, home sales absolutely tanked because we basically had stay-at-home orders in March and April of 2020. So that's pretty mind-blowing that we had the biggest decline in home sales since the early onset of this pandemic here. And so right now we're seeing an increase of housing supply, yet a decrease in home sales, which of course is implying that home buying demand is decreasing. And of course, we're seeing a housing market shift here. And speaking of a housing market shift, this has started impacting sales prices. So they're still growing by double digits year over year, but the 11% increase year over year is the smallest in nearly 2 years. So the 11% increase compared to 1 year ago for home prices is the smallest in nearly 2 years, but also compared to 1 month ago, home prices actually decreased, and more on that here in just a little bit. According to Redfin's chief economist, Daryl Fairweather, she had this to say: the country's economic woes have already cooled this housing market, and they're likely to continue dampening demand. The Fed has signaled they're going to be raising interest rates, of course, and that could harm consumer confidence and lower stock prices, which of course means that fewer home buyers can't afford a down payment in order to buy a house. This is definitely true because a lot of people sell stock in order to use that for their down payment in order to buy houses. Also, I was talking to a really good buddy of mine who owns a mortgage company. He's a loan officer, had been a loan officer for a very long period of time. And he stated that a lot of people right now who get compensated, or the majority of their compensation is from stock options or restricted stock units, or RSUs. If those people are getting the majority of their compensation through stock options, then lenders may no longer be able to use those RSUs in order to qualify them for a loan. Therefore, as I noted right here, this is going to lower people's ability to get a loan if the majority of their compensation is from these RSUs, which is basically stock options. He said you can't use the income from these stock options if the value of those stocks has been decreasing greatly. Historically speaking, lenders have been using RSUs in order to qualify people to buy houses because they do use that they do qualify that as actually income. But when the value of those stocks decreases greatly, they can no longer use those stocks as income purposes in order to qualify people for loans. Therefore, this really could affect housing markets such as San Jose, California, where a lot of people are compensated using RSUs. I thought that was very interesting to learn about this just a couple of days ago. But as you guys may know, I am not a loan officer. This is not my area of expertise. But if you are a loan officer and want to provide some additional insights regarding this, then please leave me a comment below. And Daryl Fairweather went on to say the following regarding home sellers and advice for home sellers right now. It says she advised sellers to commit. If you do decide to sell, do it quickly before demand potentially falls further, and price carefully. Now it's not the best time to test the waters. She basically said here that you'll do more harm than good if you overprice your house and then have to do price reductions in order to attract a home buyer. I absolutely agree with her regarding this because what we're seeing right now is a lot of overzealous home sellers who feel like they're going to be selling their houses for far more than their asking price. They're going to get a ton of offers, just like their neighbor did 3 months ago. But 3 months ago was an entirely different housing market. So if you do decide to sell, my advice to you guys as well is be more aggressive on your price, because in my opinion, what's going to happen is that once the mass media starts talking about home prices decreasing, that could incentivize people to get their houses listed for sale, which of course could increase new listings and of course would increase housing supply, which would have the effect of slowing our housing market even further if housing supply increases further as well. Therefore, if you plan to list your house for sale later this year or maybe even next year, you could potentially be looking at selling your house for less than what you could right now. Of course, I'm not a real estate market fortune teller. My crystal ball broke a long time ago, so time will tell. And they also talk about home buyers right now because right now it's basically a mixed bag for home buyers. Basically, home buyers right now are looking at higher monthly housing payments, of course, due to home prices increasing and, of course, because of rising mortgage rates, but also inflation as well. A lot of people are spending more money right now because things are just more expensive right now. Also, I did some calculations for you guys. Compared to May 2020, compared to May 2022, home sold prices have increased 44% in 2 years. So that's according to the latest trends, according to the National Association of Realtors. Home prices have increased about 44% on a national level in the past 2 years. Therefore, buyers right now are still paying a high home price right now, but they are facing less competition, which of course allows them to make less risky offers. Okay, changing gears slightly, let's talk about housing market trends for the entire month of June 2022 compared to the previous month and also compared to 1 year ago, June 2021, obviously. So the median sold price, again, this is a lagging indicator. Take a look at this. The median sold price Again, this is a lagging indicator because this is when the home seller accepted an offer from the home buyer about 1 month ago. So the median sold price is actually just over $428,000. This is an 11.2% increase from a year ago, but this is the smallest increase in nearly 2 years. Also, look at this, month over month, home prices have decreased by 0.4%. This is obviously a very small number, but it's obviously a step in the right direction if we want to have some more normalcy in our housing market. Also, stay tuned because I'm going to be sharing how each of the cities in the US fare, because some areas have had a much bigger decrease in home prices compared to 1 month ago. So right now we're seeing a softening in home prices, which of course is a positive sign. And also we're seeing fewer houses being sold. So on a month-to-month basis, the number of houses sold in the US is down 4.3% and down 15.5% from 1 year ago. And by the way, these are seasonally adjusted numbers. And what we're also seeing right now is a decrease in contracts signed, which of course is pending home sales. So pending home sales is down 1.5% on a month-to-month basis and down almost 13% from a year ago. We're also seeing basically new listings being flat. So we're not seeing this huge increase of new listings. So it's interesting to see that the number of new listings, which is a measure of people listing their house for sale, is down 4.4% from a year ago. But take a look at this because housing supply, which is of course all homes for sale, is actually up 1.8% from one year ago. So clearly, because we're not seeing an increase of new listings, yet we're seeing an increase of housing supply, this increase of housing supply is really from a decrease in home buying demand because we're seeing less contracts signed by 13% from a year ago. And because of this slowdown in home buying demand, houses are sitting on the market longer. So days on the market is actually a little bit longer compared to 1 year ago. It's taking about 3 days longer to sell a house from a year ago and 1 day faster compared to 1 month ago. Also, the month supply, we're sitting at a 1.7 month housing supply right now. And that's a slight increase from a month ago and also from a year ago as well. Also, the percentage of houses that sold above their asking price is sitting at 55.5%, but that's a decrease of 3.7 percentage points from 1 month ago. And what we're also seeing right now is the average sale to list price ratio is at 102.3. That basically means that home sellers as of June of 2022 sold their houses on average for 2.3% more than their asking price. But this is actually down from 1 month ago and also down from a year ago as well, which is further indicating that we're seeing a softening in home buying demand. So before I summarize today's video for you guys, I also want to mention that I'm going to be making a separate video sharing how each of the cities fared across the United States, because there's some pretty big differences regarding home prices, houses sold, and of course, housing inventory. So to summarize today's video, right now we're seeing a decrease in home buying demand, and that of course is due to rising home prices and of course rising mortgage rates. So home prices increased 11.2% from a year ago, but that's the smallest increase in nearly 2 years. We're also seeing fewer houses sell and also less contracts signed, both of those declining by double digits from a year ago. And we're also seeing fewer listings. But despite this, we're seeing an increase of housing supply, which of course is due to a pullback in home buying demand right now. What we're also seeing right now is that houses are selling a little bit slower compared to a year ago and also compared to 1 month ago. And the month supply has been increasing as well. 55% of houses are selling for above the asking price, but that trend has been decreasing as well as the average sale to list price ratio still above 100%. So basically 100% means that on average, home sellers would be selling their houses for their asking price. So right now, houses are selling for just above the asking price, but this is a lagging indicator what our housing market was like 1 to 2 months ago and not really necessarily right now. So with that said, please hit the like button if you got any value out of today's video. Also stay tuned for part 2 of this 2-part video series. Hope you guys have an awesome day and look forward to seeing you on the next video.